How do you make your money work harder for you? The banks and building societies aren't paying us an awful lot of interest. Some people have taken more of a risk in the hope of a fatter profit and loaned their money directly to businesses or to other people. It's called peer-to-peer lending. Did I say it might be riskier? Here's someone we borrowed, Ramzan Karmali.
Savers have taken a knock over the past couple of years as interest rates have plummeted. In fact, the rate of return on easy access savings accounts have fallen almost 70% since 2011. But it seems that more and more traditional bank and building society customers are voting with their feet. Savers, like Nick Hallwood, have turned to peer-to-peer lending schemes. Under these schemes, savers make loans to other individuals and small businesses rather than keeping their money in a bank or building society.
I'd been aware of peer-to-peer lending, but obviously with a small amount of money I decided to put my toe in the water. If I look at the return I've had over the last year, after a small amount of bad debt, which is obviously one of the risks, I've got a gross return of about 4.9%, probably twice or maybe slightly more than the rate I would have got by putting the money into a one-year bond with a bank.
And Nick's not alone. Whether lending to businesses like this boatyard or to individuals, the peer-to-peer sector is growing fast. The three big players are Zopa, the Funding Circle and RateSetter. By last April, they had facilitated loans worth £243 million. Today, this figure is fast approaching £500 million, and one study predicts that over £12 billion a year will be lent through these schemes.
They offer a very good deal. What you see is what you get. It's a very clear deal, it's very fair and transparent. There isn't any small print, there aren't any hidden catches, and the rates are good. They're much better because there isn't a fat cat sitting in the middle taking some of your money.
The rewards may seem attractive, but experts warn that when investing in these schemes, you should be aware of all the risks.
Your funds are not covered by the Financial Services Compensation Scheme, and also that there is the potential of bad debts, although some of the schemes do have a safeguard provision fund to cover some bad debts. It's also worth bearing in mind that until next year, they're not covered by the regulatory authorities.
This boatyard is among many businesses as well as savers who have greatly benefited from peer-to-peer lending. But predictions that it will be seen as a real alternative to traditional forms of saving and borrowing have yet to be proved. Ramzan Karmali, BBC News.
And one of the Saturday papers looks at a similar scheme. The Guardian looks at crowdfunding. Lots of people investing small sums in local businesses using the internet to sort it all out. We talked about this on my Sunday night business programme on Radio 5 Live just last week. According to Reuters, the amount that businesses raised from crowdsourcing jumped 81% last year.